Hello everyone. This is Dr. Hessa Al-Fadhel, the course coordinator of Accounting 112. In this video, I'm going to explain Chapter 5, Part 2. The chapter title is Accounting for Merchandising Operations. The fourth learning objective in this chapter is to analyze and record transaction for merchandising sales using a perpetual system. To calculate the gross profit in accounting for merchandise sales, first we need to take the net sales. When I say net sales, it means here the sales minus any sales discount and any sales returns and allowances. Then I'm going to deduct it from the cost of goods sold. Then I'm going to get the gross profit. So, if they ask you to calculate the gross profit, remember that you need to take the net sales, which means sales minus sales discounts, sales returns and allowances, then the total minus the cost of goods sold. Previously, we learned in the first part of the chapter how to record the purchases of the merchandise. Now, in part 2, we're going to learn how to prepare the journal entry for the sales of merchandise. So now let's see this example. Now, assume yourself as a seller, not a buyer, a seller of a merchandise. So now we have Z-Mart, they sold 1,000 of merchandise on credit. So now Z-Mart is no longer a buyer. Now Z-Mart is the seller and they sell 1,000 of their merchandise on credit. And the merchandise has a cost basis to Z-Mart of $300. Now, how we're going to record the entry? If you are the seller and you're going to record the sales of merchandise, we usually record it into 2 steps. Remember, 2 steps to record the sales of merchandise. Now, Z-Mart, they sold the merchandise. So if you sell the merchandise and on credit, it means that I did some sales, but I did not receive the money yet. Why? Because when I sell it on credit. So the first step, I have to record the revenue side journal entry. But remember here, we're not dealing with, we cannot call it as a revenue. I'm going to call it as a sales. I'm going to say accounts receivable to sales. Why did I put accounts receivable on the debit side? Because the company did some credit sales. They sell the merchandise on credit, which means they did not receive the money yet from the customer, but they're expecting to receive it soon. That's why we record it as account receivable. And then here on the credit side, I say sales. Sales here, it means as a revenue. Why I did not call it as a revenue? Because this company is a merchandising company, which they sell products, not services. So that's why I'm going to record it as a sales. How much I'm going to record it with? I'm going to record it with 1,000. The second step is to record the cost side of the journal entry. Remember, if you're the seller and you're selling merchandise, you need to prepare the entries in 2 steps. You have 2 types of entries. The second step, I need to record the cost. Why? Because I want to see how much left in my inventory. I'm going to say cost of goods sold to merchandise inventory. Why merchandise inventory on the credit side? Because I sell. If we sell a merchandise, it means that my inventory or my stock or the products inside my stock or store is reducing. Why? Because I sell from them. So when you record the second entry, we always say cost of goods sold to merchandise inventory. Remember, when you're going to record it, you have to record it at cost. So in the journal entry or in the transaction, they're going to give you 2 numbers. One, the amount of the sales, and the second number is the cost. So 300 here is the cost basis. So that's why I record it on the second step, because I'm recording the cost. Okay, now let's see this example, sales with cash discount. So as we saw previously, we said that Z-Mart is the seller and they sells $1,000 credit sales of merchandise with a term of 2% discount if the buyer pay us within 10 days, otherwise the credit period will be until 45 days. So you have to remember, as I said earlier, that to prepare the sales of merchandise entry, we need to make sure that when you are going to prepare it, you have to record two entries or two steps. The first step is you have to record we set the sales or the revenue journal entry. So how I'm going to record it, I'm going to say accounts receivable to sales. Why did I say accounts receivables? Because Z-Mart, which is the seller, they sell merchandise on credit, which means that they did not receive their money yet. And then we record sales because sales here is considered as revenue. So I record them with 1,000, which is the sales price. Then the second step, I have to record the cost. So how I'm going to record the cost, I'm going to say cost of goods sold to merchandise inventory. And I'm going to record it with the cost basis price, which is 300. Now, let's assume that the buyer pays within the discount period. Now, me as a seller, I gave the buyer, Z-Mart, which is the seller, gave the buyer a credit term. So, if the buyer pay within 10 days, then the buyer will get discount. So now the buyer decided to pay us on the 22nd of November. So now from 12th of November till 22nd of November, how many days? 10 days. Which means that the buyer pay the seller within 10 days. So it means here that there will be a discount. Remember here, I'm preparing the journal entry of the seller. So how I'm going to record the journal entry for the seller? So because I'm the seller and the customer will pay me, it means there I'm going to receive cash. And because there will be a discount, the buyer paid within the discount period, so it means now I have to give the buyer a discount, and I'm going to call it sales discount. Now, the first step is I'm going to close my account receivable. When you're going to prepare the payment journal entry, I'm going to record the account receivable first. So my account receivable in transaction, the first transaction, which is in November 12, was 1,000 on the debit side. Now I have to close it. Why I have to close it? Because I received the money from the buyer. So I'm going to close my account receivable on the credit side with 1,000. Then I'm going to calculate the sales discount. Remember here, if you are a seller, you are going to call the discount as a sales discount, and you will always record it on the debit side. So that's why on the debit side I have sales discount. How did I calculate the sales discount? Well, I take 1,000, which is the price of the merchandise, then I multiply it by 2%. From where did I get the 2%? Because me as a seller, I gave a credit term to the buyer 2%. So I'm going to say 1,000 multiplied by 2%, which means the sales discount is 20. So which means me as a seller, when I receive the cash, I did not receive from the buyer 1,000. I receive 980. Why the cash is on the debit side? Because I'm the seller. The buyer pay me. So when the buyer pay me, it means my cash is increasing. But I'm not going to receive 1,000. I'm going to receive less than 1,000 because me as a seller, I gave the buyer a sales discount. So how I'm going to calculate the cash? I'm going to say 1,000 minus 20,000, which is the sales discount. It means I received the cash of 980. So remember, when you prepare the journal entry for the payment, always first close the account receivable in the credit, then calculate the sales discount on the debit, and then say account receivable minus the sales discount will give you how much is the cash that you receive as a seller. Now let's see the other example. Now assume that the buyer pay me on the 27th of December. So the buyer purchased on 12th of November, and now he's going to pay me within December 27. How many days from 12 November until 27 of November? It's 45 days. Do you think that if the buyer the seller pay Z-Mart within 45 days, he's going to get discount? No, he's not going to get discount because he needs to pay within 10 days to get the discount. So now how I'm going to record the journal entry for the payment, I'm just going to record it normally without any discount because the buyer pay me within 45 days, which is after the discount period. So how I'm going to record the entry, I'm going to say that my cash will increase as a seller. Now I'm preparing the journal entry, remember here for the seller. So the seller will receive cash from the buyer. So my cash is going to increase as a seller with 1,000. And I'm going to close my account receivable. Why? Because I just received the money from the buyer. Again with 1,000. Why 1,000? Because the customer or the buyer needs to pay me full amount because there is no discount. This is very important. Please pay attention and study this slide well. Now we are going to talk about the sales return and sales allowances. In part 1 from the chapter, we talked about purchase return and purchase allowances. Now they're the same concept. When I say sales return, it means that the customer returned for me the merchandise. But when I say sales allowances, it means me as a seller, I gave the customer a price reduction because the merchandise was damaged or defected. Now let's see here an example of sales with returns and allowances. Now the customer, he returns the merchandise which was sold for 15 and it has a cost of $9. Now remember, if the customer is going to return the merchandise to the seller, how the seller is going to record the entry? Here you have to remember again, if the customer is returning the merchandise to the seller and you are the seller, you need to prepare a journal entry. And when you are going to prepare a journal entry, you have to prepare the journal entry in 2 steps. Now the customer returned the merchandise. So how I'm going to record the entry? I'm going to say sales returns and allowances to cash. Why my cash is decreasing? Because it means that the customer is returning the merchandise to me as a seller and I'm going to give him the money back to the customer because he returned it. How much I have to record it? I'm going to record 15. Then how I'm going to record the second step, which is the cost. I'm going to say merchandise inventory to cost of goods sold. Why I have here merchandise inventory on the debit side? Why do I have here merchandise inventory on the debit side? Because the customer returned the merchandise to me as a seller. It means that my inventory is going to increase again. Why? Because the customer returned to me the merchandise. It means now my inventory or my stock or the product in my store is increasing. That's why I'm going to record it on the debit side. And the cost of goods sold will be on the credit side. And I have to record them here at cost. Remember, always step 2, I have to record it at cost, and the cost here is $9. Now, we'll talk about when the buyer granted an allowances. What does that mean? Assume that $40 of the merchandise Zmart sold on the November 12th is defected, but the buyer decided to keep it because Zmart offered $10 price reduction. Now Zmart is the seller and they sell to the customer merchandise. But then the customer found that $40 of this merchandise is defected, which means damaged. But the buyer said to Zmart, which is the seller, he told him that I'm not going to return it, I'm going to keep it. Then Zmart tell the buyer, okay, if you want to keep the merchandise, keep it, but I'm going to give you a price reduction. Remember, price reduction is not like a price or the sales discount. Here we're not going to give them a discount, we're going to give them a price reduction of $10 because the merchandise is damaged or defective. So how I'm going to record the allowances here? And if there is price reduction, which means that this is an allowance. So I'm going to say sales returns and allowances to cash. How much is the price reduction? Is 10. So I'm going to say 10 and 10. This is very important. Make sure you know how to prepare the journal entry for sales returns and sales allowances, and they are almost fixed entries. The last objective of this chapter is to define and prepare multiple step and single step income statements. This is the end of chapter 5, part 2.